Next up, we have Keith Neumeyer, First Majestic, and he's going to tell us a bit about silver production. So we're changing momentum a bit to a producer, and First Majestic held back quite a few ounces recently, so I'm more curious how that strategy is playing out.
Yeah, very good. Well, it's worked out quite well. Silver ended Q3 at 22.5 bucks, and today we're at a little over 24. So good amount of cash being added to the balance sheet as a result of that. So that's always a good thing. I can talk a little bit more about it if you wish, but I only have 15 minutes on stage, which is not a lot to talk about a $3.5 billion company. So the most important thing on this slide is the ratio, 7-to-1. For every 1 ounce of gold we're mining currently, we're only mining 7 ounces of silver. Look at the chart. We peaked out at silver production in 2016 at 880 million ounces. In 2020, we produced 800 million ounces worldwide. Come to my presentation tomorrow in the afternoon. I'm going to talk a lot more about silver and what's happening in the silver space. We've got two industries, the electric car industry and the solar panel industry, both consuming over 20% of the world's supply of silver. And these two industries are growing like crazy, as you know. So it's only up from here as far as I'm concerned. Different technologies we take for granted, but again, I'll talk about that tomorrow. So going into First Majestic, we're the purest of the majors. 55% of the revenue is from silver. That's dropped as a result of the last acquisition we did, which is the Jerrit Canyon Gold Mine. Very well aware of it. We know we're looked at as a silver company. Of course, that is my favorite metal. And show me a nice silver asset, I'd love to buy it to increase its purity even more. Big land package. We're in 2 countries now. Market cap $3.5 billion. That's the best looking balance sheet we've ever had in the company's history. Q4, I'll tell you, is going to be a bang-up quarter for us. Ermitaño's coming in line. I'll talk a bit about that. Jerrit Canyon is going to have a great quarter, and with the holdback of those ounces, which are currently being sold, I've sold about half of those ounces in the last couple of weeks at about $3 more than what the trading price was last quarter. So that's a lot of extra cash being generated. So it's going to be a great quarter, as I said. Going into the assets, 4 dots are the producing mines, 3 in Mexico and 1 in the United States, in Nevada. Nice thing that separates us from the other miners is that we produce 100% doré bars. Big thing, difference, and a lot of people don't know the difference, but the assets that we shut down, which is the La Paria, Del Toro mines, were concentrate producers. So these are mines that are producing a lead silver con with, a lead zinc con with silver in it. So it's a lot more expensive to produce and a lot more expensive to refine. So when metal prices were much lower, we found that these mines were not producing any real cash flow, so we shut them down. At today's metal prices, they'd probably be okay, but they're small mines, and all our investments going into San Dimas and Jerrit Canyon, Santa Elena and Jerrit Canyon right now are really our focuses of our current investments within our portfolio. We're going to end the year at a record 2021. We expected actually to have a record 2020, but with the mines being shut down due to COVID, we had a bit of a setback, but we're making up those ounces, and we did add the Jerrit Canyon acquisition in April of this year, which is going to give us a record 2021, and 2022 is even going to be better. Our production, you see there, just shy of 14 million ounces of silver, a little bit less than 200,000 ounces of gold, giving us equivalency of about 27 million ounces, and our costs are there. Our CapEx 205, now about 40 million of that is going to Jerrit Canyon. We've got the largest exploration program going on in the company's history with 27 drill rigs currently active. There's a slide coming up on that. And of course, we're making other investments to expand the operations. Here's the exploration slide. Probably the most important thing on this slide is the grade. Look at the bottom gray line on here. You see the grades are consistently increasing over the last years. This is successful drilling and successful M&A activity. So, when resources are going up and grades are going up, that's a pretty good place to be as a mining company. So Jerrit Canyon, I'll get quickly into this. I get asked all the time, why Nevada? We've been in Mexico for 19 years. I put the company together in 2002, and we looked around. We're trying to expand the business, and and this asset came to our portfolio, didn't check the silver box, unfortunately. But every other box I look at when I'm doing M&A activity is one, expansion. Can we expand the asset? It produced 112,000 ounces of gold last year. We expect it'll be about the same this year. We're expecting it'll be about 135 million ounces next year, and 200,000 ounces, by 2024. And that's just what we know. Exploration-wise, this asset has not been invested in at all, really, for the last 15 years. The last three owners, one of them went bankrupt during the fall in metal prices, from $1,800 gold to $1,000 gold. And then it was taken out by Eric Sprott, who did a pretty good job cleaning it up and then handed it over to us. And we're now expanding it, as I said. You see the grades here, really good grades. Costs are a little bit on the high side, we know that. We spent about $9 million last quarter in the tailings lift, which hit our costs. That's coming to an end. So look for those costs to start getting down to more industry standards in Q4, well, the end of Q4 and into Q1. And just some additional things, and I'm not going to read this slide, but one interesting thing about this is this mill has a 5,000 ton a day capacity. It's only running at 2,300, 2,400 tons right now. So, we're expecting it's going to hit 4,000 tons by the end of 2023. And it's also got two roasters. There's only two mines in all of the state of Nevada, three mines in the state of Nevada that have roasters. You can't permit a roaster anymore as far as we're concerned. If you did, it'll take a long time and probably cost you, $500 million to do it. So we're very happy to have this roaster in place so we could use it for assisting other miners in the area. There's lots of juniors who are developing their projects that don't have mills. We could feed this mill potentially with ore coming from other regions or areas. Short term, we're expanding this by joining these two mines. Now, the SX mine and the Smith mine are about half a mile apart, and we're joining them underground, which is going to allow us to reduce the workforce, reduce the fleet size. We'll use one entrance as an entrance and the other as an exit, which is really going to help logistics and lower costs. And that's underway. This drift, we started right away. We took over this mine in April of this year, and this drift is coming to an end, really within the next 2 weeks, which is great. And these are the exploration targets, 25 targets, decent grades. We can't hit all of these right away. We've got 6 rigs active right now at this asset. We're testing them one at a time. We're focused on the open pits. Back in the 80s and 90s, this is run by Freeport-McMoRan as an open pit operation. It's all underground now. We're going to rehabilitate these open pits over the next 2 years. That's going to give us our 200,000 ounces annual production. And these are some of the open pits. We're 3 of them in the north there are the ones we're currently focusing on. And going into San Dimas, was there a time clock around? Okay. San Dimas is our biggest mine. You see the grades here, almost 300 grams silver, 3 grams gold. Highly profitable operation, and it's getting better. When we took it over, it was run down. We've been improving it and expanding it. We actually just put a new GM in place here just in the last month, and he's doing some pretty good things short term. So look for pretty good things happening at San Dimas. Large land package, gold, silver everywhere. Very prolific part of Mexico. This operation will be running for at least the next 100 years. It's, as far as we know, it's been operating for at least 300 years already. It says 250 there, but records show it actually probably dated back even before that. La Encantada, pretty well flat line. I'm not going to spend a lot of time here. It's been a solid asset for us in our portfolio right from 2006 when we bought it, and will continue to be a great asset for us. This is really one of our key investments. Those of you who follow the company, we made a major discovery 4 kilometers away from this mill back in 2016 called the Ermitaño, which is that red dot there. Just going to the next slide, these are the grades. You can see 4 grams gold there. And you see all the work we've been doing. This camp we had to build due to the COVID issues. We have almost 500 people living in this camp, building this mine. And it's now in production. We actually poured our first silver gold bars just last week, ahead of schedule. And we actually have a picture, if any of you care to see it. We poured 33 bars here just last week. Each bar has a value of $130,000, which is pretty good. We're actually 2 months ahead of schedule on our first pour. So this mine, I'm not sure if I can go back here, but here we go. You see the production here is just shy of 5 million ounces of silver gold equivalent, or silver equivalent, about 50% silver, 50% gold. In 2022, this operation will produce about 8 million silver equivalent ounces. In 2023, it'll be probably north of 10 million ounces as a result of Ermitaño coming into line. And we've just now discovered what looks to be what the geos on site are calling a twin ore body. It's a little bit too early to get too excited about it, but about 500 meters away from this discovery, they're now hitting a pretty interesting looking structure. So we're feeling that this mill will be operating for quite a long time in the future. The life of mine of Ermitaño alone is about 7 years. Santa Elena itself has several years ahead of it as well. So this land package, which you can see here, this is a monster land package. It's 70 miles long, 35 miles wide, almost 250,000 acres in size. The Las Chipas property, which is owned by Silvercrest, is in that little white square up there. We've got a couple rigs in the green area. We've got 4 rigs in the blue area, 3 rigs, I think, in the pink area. And we're now permitting drilling in the Algachi, or the yellow area, which should start next year. So we've got a huge amount of focus on this region of Mexico. We call it, or it's nicknamed the Nevada of Mexico. And I think that's it, really. So going into some technology, you see this HIG mill here. This comes out of Austria, Austrian technology. I actually went to the plant that built this back in 2019 before it was delivered. And it's the first HIG mill installed in Latin America. And it's been operating since 2019. And you can see there it's generated quite a lot of revenue. We're installing this technology throughout the mines, including we're looking at Jerrit Canyon as well. Exciting technology. When we bought Santa Elena, for example, recoveries were 65%. We got it up to about 85% on our own just by doing some tweaking. When we put this technology in, today we've got 97% recoveries. Pretty amazing payback. And going green. We converted over our last diesel plant, which was the Santa Elena, over to LNG. And you see our mix of energy consumption there. The hydro one, we're looking to, this was a lot of the dry season. Now we're in rainy season. So you're going to see this hydro number go up for the end of the year. But we're really focused on this a lot. Important, especially in today's world. And that's the big LNG plant that was built at Santa Elena. And it's now producing about 95% of the energy at Santa Elena. Our purity, based on the pure group, and I'm at 0.
Fantastic. Well, we have 2 minutes for questions, actually.
Okay.
So might as well use them.
Okay.
And I actually have one for you, because in an interview we did a while ago, you said you're not a geologist, so exploration was never a focus. Now we're here, you're talking about $35 million exploration spend.
Yeah.
You always bought your ounces. Where does the shift in mindset come from? And do you think, and maybe let's generalize it a bit as well, is that a sector thing as well? More focus on exploration?
Yeah, it's a good question. I think it's just because we're looking for growing the assets, and the M&A opportunities are less obvious than they were a few years ago. And I think we're kind of forced into doing exploration. And we've got a huge land package, so why not do it? We just hired a new VP of exploration. He just started a couple of weeks ago. Really good guy, so I think you're going to see more focus, actually.
Can we generalize that as well? Is that something we'll see from the majors in general? Is more exploration spending?
It's a good point. I don't know. Yeah, I couldn't make that call.
Okay. Do we have any more questions for Keith? Hiya.
What do you have thoughts on silver companies buying gold companies and what that will do to his rating prediction?
Yeah.
Bring the silver rating down or your gold rating up? How's it going to look?
Well, if you're looking to grow, it's really tough to grow buying silver assets because they're just simply not around. We're invested in GR Silver, which is the company that just was up there previously. We're also invested in another company called BlackRock. We're looking at silver assets, and we would love if you've got ideas to, show me a good silver asset. I'd love to hear because that ratio 7-to-1, and the consumption of silver is growing every year, and the production's dropping. It's a problem. It's going to be a major problem.
Fantastic.
But I also want to grow the business at the same time.
Keith, thank you so much.
Great,
We'll
thanks.
see more of each other tomorrow.
Yeah, for
Thank you so much.